You are listening to chartingwealth.com for Tuesday, the 22nd of May, 2018. Thank you for all the purchases of our book, Charting Your Way to Wealth, over the weekend. Had some great comments by a good friend of mine, a master trader, about the book being concise, clear, and full of lots of valuable trading information. We so appreciate all the good reviews you guys have been giving us, and all of you have been sponsoring us by buying the book. As you know, it costs a great deal of money to provide you with this information, and this has been really our first concerted effort at putting some money in the bank to help us pay for all the expenses of putting this together. So thank you so much. You can get your copies at our website, chartingwealth.com. Also at the YouTube channel, there are links. Under the Daily Market Review, there are links to it. And your emails, those of you who subscribe, and please encourage you to subscribe. You can subscribe at chartingwealth.com to our Daily Market Review. Comes to your box every day, and there are links in there under the comments where you can also link and purchase the book, as well as the Trader Journal, which has our trade worksheets, daily market worksheet, weekly market worksheet, and trade worksheet, everything you need to put together your trader's compendium. This will be your almanac to go back and look at and help you remember what you learned in the past, help you follow cycles, help you find great trading information. And again, there's nothing like learning by doing. In fact, that's the only way you're going to learn how to do what we do. Also, lastly, we did a poll over the weekend with the weekly market review, the comprehensive review and forecast, and the results came back 100% of the responders said that they are very interested in learning short chart trading, which again, during this time of year, is one of the best ways to try to trade if you're going to trade in the summertime. Now remember, the caveat is summertime is the worst, hardest time to trade. So much of the volume leaves the market in May and does not come back until the fall-winter trading zone. That's when things get good. How do they get good? They trend, and that's the problem we have. In fact, as we look at the 4-hour chart on the S&P 500, we can see that it's been sliding sideways since about the 12th, actually probably a little before that even, since about the 11th of May, just sliding sideways. And again, makes it very hard to find anything to trade. Now let's start everything up for the day. The weekly chart going into the third week of up movement, only the first day of the latest chart and the latest weekly chart. And what do we see happening on the first day of the candle? We see the derivative oscillator. So far, now it can flip back over because it's just started drawing. It's a 5-day candle. This is only the first day, so only 1/5 of the energies in this candle. So far, it's up. The derivative oscillator is going up. Price percent oscillator looks like it's getting close to crossing over, going up. What's going on the 2-day candle? Of course, it crossed over going up on the 16th of April and went up for another 2 days and then down for, what, 9 days, 10 days, and then up for 6 days and then turned around and has started building, but again, just now has reached where it topped off back on the 14th, the 2-day candle on the 14th. So again, we'll continue to watch things, but the sideways slides make it difficult. Derivative oscillator gaining upward momentum. Price percent oscillator headed up just the first day of the latest 2-day candle. What do we see on the 4-hour chart? It's in a confirmed down move. So again, that sideways slide makes it very difficult for our oscillators to oscillate and give us accurate signals. So again, when we find good solid trades, we will let you know. Otherwise, remember, first rule of trading is don't lose money. Second rule of trading, make money. But if you lose money, you have to make a lot more money to make up for it. So we are trend followers. We don't get out there and guess where the market's going. We are not gamblers. You want to gamble? Go to Las Vegas. Okay, what do we see going on QQQ? That's the NASDAQ 100. It also has seen the derivative oscillator flip over to going up. Price percent oscillator has not pushed through yet. We have a red open box candle. Again, it gives you some caution. It's not a green open box, nor is a red solid down candle, but it is giving you some caution saying that things are slowing down in price movement as far as our Heikin Ashi candlesticks go. Look at the 2-day chart. What do we see? Well, on the 2-day chart, we see that things again are sliding sideways, going into our third sideways candle, spinning top, then a doji, and then this latest candle is a spinning top. Price movement has not even reached where it was back on the 2-day candle ending on the 14th. And of course, as we look at the 4-hour chart, what do we see? We see a doji at the end of the day. We see a sideways slide, still in a confirmed down move on the 4-hour chart. So no trading opportunities right now on QQQ, or that's the NASDAQ 100, or the S&P 500. Back to the weekly chart, looking at SPY. Now remember, we had a weekly vertical crossover going down over the weekend, but what did we see happen? Well, so far we haven't seen much occur. We're into the first day of the latest candle. It is a red down candle. Now again, this is the Heikin Ashi candlestick, and it is showing you that as far as average pace, which is what Heikin Ashi means in Japanese, it is going down. And we will put a link here to our Heikin Ashi training. Only 74,000 people or so have watched it. It's the most popular training we have done. I really encourage you to click on it and take that training. But Heikin Ashi candlestick is showing us so far for the first day of the latest weekly candle a down move. Derivative oscillator is gaining downward momentum. Price percent oscillator is going down. Now remember, this is, again, just the first day of a weekly candle. It's our Heikin Ashi candlestick, even though TLT was technically up for the day. We also see on the 2-day chart that the derivative oscillator is gaining downward momentum. Price percent oscillator still headed down, although it was so far a bit of an up candle on the first day of the latest 2-day candle, has pushed through the 2-day trend line. As we look a little closer, you see on the 4-hour candle that it appears to be getting close to crossing over, going up. Those of you looking for a chance to jump into a down move on TLT, of course, have not found it because it has not occurred, because there was no jumping in point. So what do? Well, we wait and see how long this pullback goes on, and if indeed, as these candles continue to develop on the 4-hour chart, when it rotates back over going down, if we still can pull the trigger, that is the 2-day and the weekly are still in confirmed down moves, then we will of course jump into that move. Don't have that opportunity yet. That's where we are. We're watching and waiting on TLT. Now, what's going on with gold? Remember, gold crossed over going down way back on the 16th of March, and then consequently after that, never had an opportunity to jump in. It went up, sideways and up over the next many weeks until the week ended on Friday, the 20th of April. The following weeks started heading down, and we're seeing the first day of this latest candle even more down movement in gold. Again, confirmed down move on gold and confirmed down movement on the 2-day chart. As we look at the 4-hour, or we go to the 2-day chart from the weekly, we see, and we're going to be able to probably redraw this, not going down at the same movement. Again, gold up 0.04%, but we see our Heikin Ashi candlestick showing the average pace heading down, derivative oscillator heading down, also along with the price percent oscillator. And as we look at the 4-hour chart, we of course had it cross over going down back on Tuesday the 15th in the morning, and gold of course consequently had a jumping in point there in the afternoon. Gold tracked down, I guess hit sort of its bottom on Monday morning, the 21st, of course this Monday at about 121.97, and then in the afternoon rounded up a little bit. Continue to keep your eye on things with this 4-hour chart losing downward momentum on the price percent oscillator and the derivative oscillator losing downward momentum, price percent oscillator headed up. So be careful as we continue to see this track. It's trying to bottom out somewhere here around 122 or so. So keep your eye on the prize. If you see a crossover going up and you've jumped into this down move back on the afternoon of Tuesday, be very leery of staying in much longer. Just be careful. Now again, remember, all things being equal, the market does tend to move in the direction of the largest chart, that is the weekly, but I have some concerns about that 4-hour chart since it started actually working again here recently. Have some concerns about it turning around on you. May see it plunge back down later in the week, so we'll keep our eye on things. But again, let the charts guide you. That's where we are, folks, as we end the day on Monday and go into Tuesday, the 22nd of May. We love to hear from you. Feel free to write us at cw@chartingwealth.com. And again, please subscribe to the newsletter. It is absolutely free. You can do that by putting in your name and address there, email address there at the website. We'll send it out to you every day. And don't forget to subscribe to our YouTube channel. You can also find us on Facebook and Twitter. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.